How's it going, everybody? Welcome back to the Alpha Futures YouTube channel. I am Ben, I'm COO of Alpha Futures. Today we're going to be talking about 3 misconceptions that most people have about day trading that are probably keeping you from becoming profitable. The first misconception I'd like to cover today is that most people think trading more means you're going to make more. If any of you have given trading a shot at all for more than a few weeks, you've probably found yourself over trading. And I'll even make a jump further to say if you found yourself over trading, you are probably losing money in those moments. I know that's always been true for me in my trading career. I personally like to hover somewhere around 3 to 5 trades per day at most. When I go back and actually review my stats month after month, week after week, year after year, I notice some of my biggest losing weeks are when I get way outside those parameters and I find myself taking 8, 10, 12, 15 trades in a day. Those are some of my worst days in my trading career. Now, believe me, there are some traders out there that their style and their skill set calls for them maybe taking as many 20, 30, maybe even more trades a day. I believe for most people, that's not gonna be suitable for beginners. If you develop a skill set that allows for you to have a very winning strategy by taking a lot of trades each day, more power to you. But I think for most beginners out there, we want to set a limit on how many trades we're actually taking per day, because especially as beginners, we're going to be losing more than we're winning. So obviously if we're taking more losing trades than winning trades as a beginner trader, more and more trades means more and more money out of our pocket. I also think setting a trade limit for yourself helps with emotional control. Something you might hear get thrown around in the industry a lot is people like calling it on tilt. This is when you let emotions completely take over your trading and you were just placing trades out of anger, anxiousness, or FOMO, right? Fear of missing out, and you were just trying to make money back as fast as possible. Whenever we're trading emotionally, we throw our skill set out the window, we throw our plan out the window, and we're probably throwing money out the window with it. So that is misconception number 1, is that more trades is always gonna mean you're making more money. In my experience, it's almost the opposite. My skill set, my trading plan only applies to so many setups on any given day, or maybe even any given week or month. It is only executing on the trades that my strategy call for an entry or exit that I have a better chance of making money on. If I'm just taking trades to take trades, more likely than not, I'm going to be losing. All right, second misconception I want to cover today is the idea that you need a ton of indicators to be a profitable trader. So again, as I said, with over trading, there are some traders out there that will be successful with a lot of indicators. I think for beginners trying to start their journey towards profitability, you should not be relying just on indicators. Now, if you become some amazing quant trader and you've developed a proprietary indicator that makes you profitable, again, that is an amazing skill set to have. I've never met a beginner trader personally that's been able to start that day one and have a profitable indicator from their very first day. So rather than relying on a ton of indicators to tell you when to enter and exit trades, I recommend actually understanding how the market works, understanding price action, basic market structure, whether we're ranging, whether we're moving in an uptrend, downtrend, looking for those higher highs, higher lows, or lower highs, lower lows. Obviously in a ranging market, we're looking for more equal lows and equal highs. I think this is much more valuable for beginners to get a grasp on because it will help them understand how supply and demand work in the market, as well as how the market goes through cycles of those bearish times, those bullish times, and the range market, sideways times. Then, if you are finding you're struggling to develop an edge or some sort of entry criteria, once you understand basic market structure, this is when you can start to bring in some indicators, maybe help give you confluence and confidence in those entries and exits that maybe you aren't getting from just purely fundamental or technical analysis on your own. That's how I recommend using indicators personally, is we like using them as almost an additional opinion that help us get our entries and exits. I personally think for beginners, relying solely on indicators is a dangerous game to play because you really won't understand how the market moves at all. And one final thought on indicators here is a lot of them are lagging. What I mean by that is they are reacting to price action after it's already happened. So there obviously are some tools out there that are trying to predict price action, trying to predict movements in the market. Something like an EMA, exponential moving average, that is trying to predict price. It can be a very helpful tool, but many indicators out there are lagging, meaning they will react to price action after the moves already happened. So obviously you can think as a trader, we're always trying to catch entries before a movement happens, whether it be a move up or a move down. We're trying to be in before that movement happens. Many indicators are only giving you an entry or exit criteria or read after that movement has already happened. And as you know, if you've traded at all, if you're in late, you're gonna turn a winning trade into a losing trade. So one other minor note about indicators there. Lagging indicators I don't find helpful at all personally. Some other people might be able to tweak them to their strategy and they work. I personally don't love indicators though, just because they typically give me an entry or exit read well after the move has happened. All right, and misconception number 3 here today is that you need a lot of money to be profitable or even get started in trading. Absolutely not true, especially the profitability part in my opinion. If you are profitable with $1,000, you have the skill set to be able to be profitable with $10,000 or even $100,000. Now, getting access to that capital, of course, is a huge roadblock. I'm not saying you can all of a sudden just find $100,000 or larger trading account. Now, that is where we come in and the prop firm industry comes in, is once traders have proved to themselves and of course the firm that they actually have a skill set that they can use and turn profitable months over and over again, guess what? You're ready to trade in the prop firm industry. And we will give you simulated capital to be able to trade that you can prove to your skill set to us and yourself and get paid out on. So for example, here at Alpha Futures, we offer 50K, 100K, and 150K accounts. Now I do recommend before you try your first evaluation with us or any other firm, you need to build some sort of skill set for yourself, otherwise you will probably just be burning through those evaluation fees. But if you're an experienced trader or even somebody that is start to show signs of profitability and you have managed, a personal account of $1,000 or $2,000, but are only making $100, $200 a month and you need access to more capital, that is legitimately the entire point of the prop firm industry, is to get skilled traders access to capital that they would not have otherwise. But if you do pass an evaluation account with us and you do get access to a qualified trader account where you can get paid out, every 2 weeks with us, you're not changing your strategy. Yes, you do have access to simulated capital that you didn't have before, which allows for you to make more money month over month, but it does not change your trading strategy or change the fact or the habits that you were profitable before. You need to bring those same habits that you developed on a $500, $1,000, $2,000 account personally. You need to bring those same risk management tools and entry and exit criteria to your now qualified account with us. Otherwise, you are not trading like a profitable trader. That money will not make you any better of a trader. It is just going to leverage your skill set into making more money month over month as a profitable trader. So if you are somebody that maybe feels like you're stuck capital-wise, not skill-wise, I really encourage you to take a look into some of our evaluation programs. As I mentioned, we do have 50K, 100, and 150K accounts starting at just $79 per month. I would love to be able to help you out with any questions you have. Please feel free to hit us up on email, live chat, or Discord. I would be happy to help you get started here at Alpha Futures. If any of you found this video helpful here today, please let us know in the comments. Hit that like button and subscribe to the channel. Would be happy to answer more questions in the comments as well. I will catch you all in the next video.